Hey Moby Trades! I want to do a video analysis update of the stock market. We'll talk about the Nasdaq QQQ, as well as Apple, Google, and AMD. We'll talk about Nvidia and the S&P 500, as well as American Airlines and JetBlue. We'll talk about Boeing, as well as Virgin Galactic, Disney, as well as Tesla, First Solar, and Enphase Energy. We'll talk about NEO, XPeng, and Plug Power, as well as the online retail ETF ONLN, Amazon, Pinterest, Twitter, Beyond Meat, Bitcoin, Riot Blockchain, and SOS Limited. So we've had a really kind of embarrassment of riches recently. I think it's important to remember that not every trade is going to be like Tesla or Marathon Patent Group or, Nvidia, where you just go to the moon right away, the stop level never gets hit, right? And we just start drinking champagne. A lot of times the biggest winners in the stock market are the ones that have kind of these nasty shakeouts, these selling climaxes before the rally. And I can actually prove that right now because a lot of the biggest winners that we've seen this year have taken 2 attempts, and we'll kind of try to talk about why. But just look at this. Netflix, we were noticing, was being accumulated by large institutions, not only from a shareholding perspective, but also from an options trading perspective, as recently as February. So it's important to remember that large institutions take a long time to accumulate the amount of shares that they want relative to their portfolio size, right? They can't make 15% of their holdings Netflix in one day like a retail trader can. So they're accumulating and accumulating and accumulating, and then that final kind of stop raid is what they eventually use to get every last kind of margin retail trader out of the market before the next leg higher, okay? And we can see that clearly with AMD, right? As recently as February, we were noticing that Advanced Micro Devices was all over the bar chart straddle and strangle screener, and it had 0% implied volatility. It was forming kind of that textbook bull flag. And even though AMD hadn't gone down very much, the sentiment for AMD was doomsday. And then, of course, when we break my stop and we go below 80, right, it's all hell has broken loose. But the thing is, institutions were accumulating options on AMD the entire time. That last selling climax was what they finally used to hit all the margin retail traders' stop losses before the next thrust higher. Home Depot is another great example where we've proven that large institutions were accumulating options on AMD, Home Depot, and Nvidia early in the year, and they used these selling climaxes right in the beginning of the second quarter to kind of get everyone out before the next thrust higher. So remember that it's common for even the best trader's stop loss to get hit the first time because the institutions are going to do everything in their power to get your last bit of shares. So this is the Nasdaq QQQ. It has a wave 1 and a wave 2. It goes on a huge wave 3. It has an ABC correction that ends a wave 4. Now, we don't really talk about wave personality, but kind of when you have that big A, B, C, that dramatic correction, that a lot of times that is a wave 2. And usually wave 4 is that textbook bull flag. But anyway, let's just get into the conservative view of the Nasdaq. The conservative view of the Nasdaq is that it's within a wave 5 higher right now. There will be at least the length of wave 1 placed at the wave 4 low, and it's already hit that. Most likely, even if we're calling this a wave 5, this is a huge wave 5 in progress, and the length of wave 3 you place at the wave 4 low is going to take the Nasdaq QQQ to 416. So here's what I'm personally looking to do. I'm still long the market with cash. That's normally the best way to be. But I think right now I'm looking for a little bit of a dip in the market, but I'm not banking on it, right? That might not happen. If this is a wave 5, I think this is wave 1 of wave 5. I'm looking to buy a wave 2 of wave 5 to ride waves 3, 4, and 5 of wave 5 to the upside. So wave 1 in Elliott wave theory is the measuring stick, right? If this really is a wave 1 in progress, then wave 3 is going to go way past 416. That means this probably isn't a wave 5 in progress at all. And if we look at the RSI really supports that. Within the cycle from the March low, we make a brand new high on the RSI within this kind of October thrust. So I think right now that the actual count for the Nasdaq QQQ is that this is a wave 1 and a wave 2 from the March low, and this is another wave 1 and another wave 2. In the short term, the kind of minimum expectation is the same. We're looking for the length of this rally placed at this low to be hit for a minimum target. But in this case, that's just a minimum wave 3 target. We'll look for a shallow wave 4 before a wave 5 higher. It looks like there's a lot of evidence that Nasdaq can certainly reach the 420, the 425 range before the next major pullback. And I think the S&P 500 really shows what the short-term view will look like. But I think that the Nasdaq, Apple, Google, they all kind of show that we shouldn't be calling tops right now. And, if having cash to buy a dip is a good thing, it shouldn't be something that we're banking on because it may not happen. So this is the Apple chart. I mean, this is a lot of evidence. We look at the stocks as a whole. whole. And XLK, the Nasdaq, and the S&P 500, they hold a bunch of Apple. They've already broken the September high. It's very likely that Apple is just lulling us to sleep before a big thrust to the upside. So this conservatively, within the cycle from the March 2020 low, within the cycle from the September 2020 low, we form a wave 1 and a wave 2, and this is a big wave 3 in progress. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and a wave 4 of wave 3 that retests the wave 1 high. So the length of wave 3 placed at the wave 4 low should take the Apple chart pretty safely to 172, 173, and that would complete this large black wave 3 at the 161.8% extension of wave 1. From there, I'd expect a shallow wave 4 correction and a wave 5 higher. The length of wave 1 placed at the wave 4 low could take Apple to 200 in the first half of 2022, even the first quarter of 2022. There's a lot of upside for, one of the most important charts in the market if we're above this low of 138 to the 61.8% retracement, which is 135. So I think Apple's a lot of evidence we've got more upside. I think Google is a lot of evidence that we have more upside. Google is, pretty safely counted as a wave 1 and a wave 2, and this is a huge wave 3 that looks really nice, and we put in a wave 4. We've broken the wave 3 high with the rest of big tech, and I think that Google right now shows it's within a wave 5, and in the next couple of months, the length of wave 1 placed at the wave 4 low is going to take Google to at least 3,320, and that's kind of the minimum wave 5 target, right? If Google goes past that, which it certainly could, we could be talking about a much bigger target, but in the short term, even conservatively, the length of wave 1 placed at the wave 4 low is going to take Google to, 3,320. And that's a pretty safe claim to make, especially if we're above this low of 2,621, right? So Google, Apple, we should maybe have cash to buy the dip, but we shouldn't be banking on it, right? And if we look at AMD right now, I think the short-term view of AMD and Nvidia send the exact same message that for AMD, this is pretty clearly to me a big old nest. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. They ended at the 50 to 61.8% retracement. So wave 3, this huge impulse, went past the 161.8% extension of wave 1. And remember, we were using the fact that this big wave 1, or we didn't really know what exactly it was, but we knew it wasn't a wave 5 because AMD made a new high on the RSI. So that's that rule being really helpful. We saw that AMD made a new high on the RSI. That meant we couldn't label this a wave 5. It was most likely another wave 1 or another wave 3. It looks like it was a wave 1 and a wave 2. We just went on a huge wave 3, and now we're trying to end wave 4 between the 38.2 and the 23.6% retracement. So the 38.2% retracement is generally a stop for a wave 4. And the 50% retracement is the invalidation. So there's a lot of kind of evidence from AMD that it looks like it wants to make at least another high. If this is a wave 4 that has ended, a lot of times for wave 4, you look for that bull flag to form. But if this is a wave 4 that has ended, the length of wave 1 placed at the wave 4 low, that says that AMD could certainly go to 175. And that kind of sounds crazy, but remember, we just kind of saw Nvidia blow the market out of the water, right? We had Nvidia going to 303 by the end of the summer of 2022 as our kind of conservative target. And we've made that just look silly. It's the end of November, and Nvidia has gone way past 303. I think Nvidia's full count, very similar to AMD, suggests that there's more upside. The length of wave 1 placed at the wave 2 low has kind of already been passed. And so this is most likely another wave 1 and another wave 2 on Nvidia's long-term chart. So I think this is a huge wave 1 and a wave 2. We just went on a wave 3 that passed the 161.8% extension of wave 1. So within the cycle from the March 5th low, we have a wave 1 and a wave 2. I think this is a big old wave 3, and now we're trying to end wave 4 right now. If we look at Nvidia, we can see that there's more highs to be made. And if we measure the Fibonacci retracement zone, I can show you guys how I do this. I go to the high of wave 3. It looks like that was 323.10. Yeah, so the high was 323.10. And then it looks like the low on the wave 2, because we're measuring the size of wave 3 to find our wave 4 retracement zone, the low was 198.54. So I go to 198.54. 198.54, and then I put in the Fibonacci retracements that I want to measure, and it looks like right here, just like AMD, Nvidia is between the 23.6 and the 38.2% retracement. So the 50% retracement is the invalidation level. I'll make this orange so that we can see it, but it looks like there's pretty safely more highs to be made if Nvidia is above 260, because that's the 50% retracement of wave 3. So the length of wave 1 placed at the wave 2 low, eventually could take Nvidia to an even further target than we thought, right? So this is a wave 1 and a wave 2, and this is a big old wave 3, then we're ending a wave 4 right now near the 38.2% retracement. The length of wave 1 placed at the wave 4 low could give a wave 5 target as high as 390 for Nvidia, and that would be much further down the road. I would like to see Nvidia form a bull flag right now, but it looks like there's more highs for this stock, and the RSI kind of supports the message. Typically for a wave 4, you have that, big kind of melt up for wave 3 where we make a new high on the RSI. The RSI kind of cools off for a little bit for wave 4, then wave 5 is that momentum divergence that we look for. So I think that Nvidia and AMD support the message that they'll hold the 50% retracement, they'll hold the 38.2% retracement, and they'll go on a wave 5 higher. So Nvidia and AMD, they have more upside. Likely the stock market itself has more upside. And we look at SPY right now. Someone asked me if I could do a short-term kind of analysis of the S&P 500. I don't normally do the short-term, but I think SPY is actually pretty useful right now. Let's talk about the big picture count. So we're at the 1-year anniversary, essentially, of me saying that this is a 1, 2, 3, 4, 5 waves impulse. This is a huge wave 1. We had an ABC correction that ended wave 2. The length of wave 1 placed at the wave 2 low takes the S&P 500 to at least 460 for this wave 3. That ended up being conservative. I think we can see why. So this big wave 3 in black, I believe, is subdivided into 5 waves. This is wave 1 of wave 3 and wave 2 of wave 3. This is a huge wave 3 of wave 3, and we ended wave 4 of wave 3 in September. So I think wave 5 of wave 3 pretty conservatively will take the S&P 500 to around 500. That would be 1, 2, 3, 4, 5 waves. We would end a big wave 3 and look for a pretty nice wave 4 correction to buy that I imagine would be, pretty substantial. I think we would feel that across the market. What's interesting is that if you look at kind of the numbers that the Nasdaq, the S&P 500, and the Dow Jones are capable of reaching, they're kind of psychological numbers, right? The S&P 500 going to 5,000, the Nasdaq going to 20,000, the Dow Jones going to 40,000. Those are all certainly within reach. And I imagine that those are going to be really big psychological numbers. And when we look at the S&P 500, there's this idea that we could end a wave 5 right above that big round number of 500, and that could trigger FOMO, right? If you saw the S&P 500 was above 500 and you sold your 401k in 2020, you're going to freak out, right? You're going to read, headlines about inflation, headlines about the chip shortage, and you are going to lose your mind when you realize you have missed this entire rally. And I think hearing SPY reaching 500, hearing the Nasdaq reaching 20K, hearing the Dow Jones reaching 40,000, I think that those could trigger some FOMO, and it lines up with the chart. So in the very short term, I really don't, the short term doesn't matter to me. Like, to be honest, I hear a lot of, gurus, they talk about some number in the futures market, and I can't even see what they're talking about. But if I had to, I think that just kind of like the Nasdaq, this is a big wave 1 impulse from the October low. I think this is a 1, 2, 3, 4, 5 waves impulse. And here's what I'm hoping to do. I've taken partial profits on stuff. I'm always kind of, taking profits along the way. And I've got a little bit of cash that I'm looking to buy a dip. What I'm really hoping for is that this is a 1, 2, 3, 4, 5 waves impulse for the S&P 500 just within the cycle. From the October low, this is 1, 2, 3, 4, 5 that ends a large wave 1 or kind of a small wave 1. And I'm looking to buy a wave 2 correction later in the future. So I'm not banking on this. I'm honestly long the market with cash to buy the dip. And I've got a little bit of hedging. I've got a pretty good amount of hedging to the downside, but my biggest hedge right now is cash. I want to buy a wave 2 to ride waves 3, 4, and 5 to the upside. So that's where my mind's at. I think in the short term, it could look like something like this. 1, 2, 3, 4, 5 ends a big wave 1. I like to buy a wave 2 to ride waves 3, 4, and 5 to, hopefully 500, right? And then I imagine when people hear 500, they're going to freak out. But what I'm really going to do, I'm not going to look at the S&P 500 at all, to be honest, because I don't need to. This is the most important, and not the most important, but it's the most useful chart in the market. It's XLV. It's just too pretty. It's a wave 1 and a wave 2, a big old wave 3 that passes the 161.8% extension of wave 1. We have a wave 4 correction. The length of wave 1 placed at the wave 4 low says XLV, very kind of conservatively, is going to hold above 123 to 124 and go on a wave 5 higher to 160. So, this rally is about, 4 or 5 months. And that kind of lines up with the end of the first quarter. We reach 160, we have a nice little correction. But I love XLV. Here's the cool thing about XLV is I already know if this is a 1, 2, 3, 4, 5 waves impulse, and if we reach 160, I'm going to look for that to end 1, 2, 3, 4, 5 waves of a large degree wave 1, and I want to buy a wave 2 correction. So XLV kind of already lets me know that when we have this blow off top to 160, that's going to end a big wave 1. I'm going to look to buy a wave 2 to ride a long-term waves 3, 4, and 5 to the upside on a lot of stocks to pay, pretty nice dividends. So here's American Airlines. We'll talk about American Airlines, the reopening stocks. There's a lot of evidence that these stocks could be getting ready for kind of big moves to the upside. We've seen American Airlines all over the bar chart, straddle and strangle screener. We've seen almost every airline at 0% implied volatility, and that doesn't guarantee anything. But you remember what we just talked about, institutions, they want to accumulate options on these stocks too, and they want to do it when implied volatility is very low, which is also when, coincidentally, retail sentiment is really low. To be quite honest, the airline ETF JETS gives the best view of the airline sector, but I think JetBlue, JETS, Boeing, they're all starting to send the message that this is a 1-2-1-2 Elliott wave nest. I think right now, if American Airlines is above 16.50, that's kind of that textbook wave 2 zone. Now, it's not the wave 2 invalidation, but it's a nice risk management level. I think American Airlines holds above 16, and it's going to go on a wave 3 to the upside. I think wave 3 will be the length of wave 1, placed at the wave 2 low. That should take American Airlines to around 33. So if you're thinking, puppy trades, what about the, more conservative view? We can talk about the more conservative view. And I think the airline ETF JETS kind of shows how even in the more conservative view, we're looking for another high. But if this was to be conservative, it would be the same result, in my opinion. If we're calling this a 1, 2, 3, 4, then this is a wave 5 that we're looking for, and I believe wave 5 would be the length of wave 3 placed at the wave 4 low. In the most conservative view, it would be the length of wave 1 placed at the wave 4 low. We're still looking for a wave 5, another high for American Airlines to the low 30s, and I think American Airlines will hold above 16. I think it looks really good. Let's just talk about JETS right now. JETS is a gorgeous template for the airline sector. I like a lot of these. I like a lot of the reopening stocks, especially with Disney. We had been talking for a while about how Disney, could have an incredible opportunity. We thought it was going to make a new high first. It didn't, but that opportunity has come. And I think that Disney, AMC theaters, even, a lot of these reopening stocks like Boeing, they're not really looking like small wave 5s. They're looking like big old wave 3s that a lot of traders aren't going to want to miss, right? So if we look at the airline ETF, it's a wave 1 and a wave 2 for JETS. I think this is another wave 1 and another wave 2. The length of wave 1 placed at the wave 2 low should take the airline ETF JETS to 34 before a shallow wave 4 and a wave 5 higher. So for a timing perspective, this rally is from, August to March, right? So, 6-7 months is kind of the more conservative view. I'm really looking for, 3, 4, 5 months if this is a big old wave 3, because wave 3 is stronger and faster than wave 1. But the airline ETF JETS looks like the length of wave 1 placed at the wave 2 low should take it to 34. Then we'd have a shallow wave 4 correction and a wave 5 higher. If this is the wave 1, the length of wave 1 placed at the wave 4 low gives a wave 5 target potentially of 44 for the airline sector ETF JETS. So JETS gives really nice risk management levels for me. If it's above the 61.8% retracement of 20, that's kind of a nice stop. The 78.6% retracement is a nice wave 2 invalidation. So even then, very similar to American Airlines, even in the more conservative view, I still think we're looking for another high, right? If we're calling this a wave 3 and a wave 4, then we're still looking for a wave 5 higher. The evidence that this isn't a wave 4 is the fact that, JetBlue has gone way past the 61.8% retracement. So even if we're calling this a wave 5, the length of wave 1 or the length of wave 3 placed at the wave 4 low says that we should still be looking for another high for the airline ETF JETS. And we'll be confirmed that this is a nest if we go past kind of 31 to 34. But this looks really good. And I think that the entire airline sector is sending a nice theme. The whole reopening sector in general is sending a nice theme that while we've kind of fallen asleep on this sector, the large institutions have not. This is a wave 1 and a wave 2 for JetBlue. I think this is another wave 1 and another wave 2. We go all the way down to the 61.8% retracement. Here's the thing. There's no reason this isn't a wave 2. And if it isn't, then the length of wave 1 placed at the wave 2 low gives a kind of regular wave 3 target of 26. And I think that would be hit in the next, 3, 4, 5 months if this really is a wave 3, but that would just be the minimum wave 3 target. We'd have a shallow wave 4 that conservatively retests the wave 1 high, then the length of wave 1 placed at the wave 4 low should take JetBlue, all the way to 34. So this sector could be getting ready for a much bigger move than we've expected, and there's a lot of upside for JetBlue in the short term and the long term above the 78.6% retracement, which is 12. So here's Boeing again, that theme over and over. This isn't kind of that, wimpy wave 5 higher. This is the big wave 3. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. We don't break this low of 191. The bigger the base, the bigger the breakout. Unfortunately, also the bigger the breakdown. None of these are kind of guaranteed to break to the upside. I just think that they will. And the options market is saying this whole sector is ready for a massive move. I think Boeing holds above 191 and kind of explodes into a wave 3 to 307 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 should complete a large degree wave 3 above 150 before a shallow wave 4 and a wave 5 higher. I think Boeing, JetBlue, Disney, we're starting to see, wait a minute, this could be the big one for the reopening sector. It really could. And for the Virgin Galactic chart, I mean, this is another one where we're seeing not only kind of reopening stocks, this trades with the aerospace and defense, but growth stocks in general could be looking for huge moves to the upside. Virgin Galactic, SPCE forms a 1, 2, 3, 4, 5 waves impulse. That's a huge wave 1. I think this is a wave 2 that ended at the 78.6% retracement. It actually presents a nice low to trade against. If we're above 14.27, wave 2 is in. This could be an explosive wave 3 of wave 3 in progress. Even just the most conservative target is a ridiculous gain, right? The length of wave 1 placed at the wave 2 low, that's the minimum wave 3 target of 60. Then we'd expect a shallow wave 4 that will conservatively retest the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. I mean, all in all, Virgin Galactic, if it holds above 14, has a path to 100, right? And they make this so it's supposed to sound silly, but that's actually conservative. We're gonna hold most likely above 14.27. I think this is a wave 1 and a wave 2. So to kind of complement that analysis, we remember that Elliott waves are fractal in nature. And if you see kind of an impulse on one degree, you very likely have an impulse on another. I think Virgin Galactic is a pretty nice example of that, where we can kind of subdivide this kind of smaller degree correction into 5 waves, where we have a pretty clear wave 3 that goes past the 161.8% extension of wave 1. And I think that this really is an impulse structure for Virgin Galactic. And one way that we measure that, I can take these smaller numbers, and we're just going to show how this is an impulse structure for Virgin Galactic. I think this is a wave 1 and a wave 2 kind of on this smaller degree. Then we have this big wave 3 that goes past the 161.8% extension. We have a shallow wave 4. We have a wave 5 higher that breaks to a new high, right? So if it's an impulse structure on kind of that smaller degree, I think it also is on the larger degree. And, there's no guarantee that any of these, kind of reopening stocks with really high risk rewards are going to break to the upside. But Virgin Galactic kind of is an example of how if it holds above 14, there's a lot of really nice opportunity in the growth sector and the reopening sector. Here's the very conservative view of Disney. It's really kind of the silly view of Disney. We talked about the idea where if Disney did have that deeper correction, it'd be a pretty nice buying opportunity. So before we even get into the wave count, one thing I want to show, we have a little bit of an objective reading right now that if Disney reverses, this is going to be a big one. This could be a huge cloud bounce off the weekly Ichimoku cloud. And if this is successful, this is going to be a multi-month, probably a multi-year rally. You can't really count Disney as a wave 4 anymore, but even if you did, it'd be a wave 1 and a wave 2. Then you're calling this a wave 3 and a wave 4 that ends at the 50% retracement. So the length of wave 3 placed at the wave 4 low would likely give a wave 5 target of 238. Now, I don't even think that's the right target, but it still kind of fits in with the idea where we're still looking for another high. We can see right now that most likely Disney is not completing a wave 4 correction. I think Disney is completing a very important wave 2 correction right now, and it really fits in with a lot of these reopening stocks that we see across the market. I think Disney formed an entire wave 1 during this huge rally. This is all 1, 2, 3, 4, 5 waves that makes a big wave 1. This kind of deeper ABC correction should not be called a wave 4 in my opinion. I think this is a wave 2. So that means that wave 3 is going to be explosive. And I think right now for Disney, what we can do is we can measure this entire kind of Fibonacci retracement zone, which will need to move this lower bound to the bottom of the chart, the beginning of the wave one. But it would look something like this, where there's kind of a 50% retracement level of 140. That's a nice level to trade above, really, in any count. So what I'll do is I'll make sure I've got the right lows. That's 79.07. And I think Disney formed a really kind of clear impulse from this low. I think Disney is one of the pieces of evidence where the reopening rally is going to be a lot bigger than we expect. So I think this is an ABC correction. The length of wave A placed at the wave B high says that wave C shouldn't go too much further than 155. I think that 140 is a nice level to hold above. And then in the bigger degree picture, the length of wave one placed at the wave too low says that possibly in the first half, but almost certainly in the summer, in my opinion, Disney is going to the 270s, and that's just a wave 3 target. We'd have a shallow wave 4 and a wave 5 higher. So I think Disney above 140, this is that kind of big opportunity that we're getting in the reopening sector. There's not going to be that dramatic wave 5 to the upside. This is all 1, 2, 3, 4, 5 waves for Disney. It's a huge wave 1. This is an ABC correction ending a huge wave 2. It could be a big opportunity right now for a blue chip in the reopening sector. Boeing supports that message. I'm going to talk about Carnival Cruise Lines real quick, just because it's a very similar idea that we could be seeing a big nest form. I think for Carnival Cruise Lines, this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So, it gets pretty tight. But if we're above this low of 19, we could see a big wave 3 to 43 before a shallow wave 4 and a wave 5 higher. I think this is the nest for Carnival Cruise Lines. This is a 1-2, 1-2 Elliott wave nest. If we wanted to be really conservative, I think we're still expecting another high. But I think that's kind of not going to be the case. I think this is a nest. We're going to go to 43 before a shallow wave 4 and a wave 5 higher. Ultimately, in this cycle, we could see Carnival Cruise Lines go all the way, into the 50s. So it's looking like an explosive move is coming for this sector. I just kind of want to show, even if we want to be more aggressive and call this a leading diagonal, this would be 1, 2, 3, 4, 5 waves. It would form a large wave 1, and we'd look for a wave 2 correction to buy and ride. But still, even then, we're looking for a huge rally to the upside. If this is a leading diagonal, that would be 1, 2, 3, 4, 5 waves. We'll make a new high into big wave 1, and I'm going to look to buy a generational wave 2 to ride waves 3, 4, and 5 to the upside. So there's a lot of reopening stocks to support this message that this is kind of, the big one. Even in the short term, I really like this gambling ETF, BETZ, BETZ. It gives a nice kind of picture of what we should look like, even some kind of risk management levels for reopening in general. I think no matter how you count it, we form a really important low in July. I think this is a wave 1 for BETZ, BETZ. This is a wave 2 that ended at the 61.8% retracement. We're going to explode into a wave 3 to 35 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low says all in all that the gambling ETF BETZ is going to hold above 25 to 26 and head all the way, to 38, 39 for waves 1, 2, 3, 4, and 5. So this looks really good. I like this ETF a lot. Here is Tesla. Remember that Tesla, we don't just trade Tesla by itself, but it's looking pretty good. I think this is a wave 1 and a wave 2. I think this is most likely another wave 1 and another wave 2. We don't even need to make that argument right now, but that is the argument I'm going to make if we go past kind of 1400. Even in a more conservative view, we're still looking for more upside for Tesla. We could say this is a big wave 3 and a wave 4. We're in a large wave 5 right now. Here's the thing. This probably isn't a large wave 5 because if we look at the subdivision right now, it looks like Tesla forms a wave 1 and a wave 2. And this is a big wave 3 that goes all the way to the upper bound of this Andrews pitchfork. So I've shown in my previous videos how Pfizer does a similar thing. Really, all in all, I don't think Tesla, to be quite honest, will go below the lower bound of this Andrews pitchfork until it completes this cycle from this really important low that we form in March. I think this is a wave 1 and a wave 2. I think this is a big wave 3, and Tesla will form that textbook bull flag, and it won't go below the 50% retracement, which is 895. So if Tesla's above 895, pretty safely, we can expect kind of a bull flag to form. I think that, we're going to form like kind of wave 1 of wave 5, wave 2 of wave 5 might hit that lower bound, and then we'll explode into waves 3, 4, and 5 of wave 5. Here's the thing. Wave 5 doesn't look like it's going to be the length of wave 1 placed at the wave 2 low. It looks like wave 5 is going to be the length of wave 3 placed at the wave 4 low, and that gives a wave 5 target of the 1600s, right? And remember, if Tesla goes past 1400, then it's not within a wave 3 or wave 4. I think that kind of is the proof right now that this is the nest. This is a 1-2-1-2 Elliott wave nest. 1368 is just the minimum wave 3 target. Even if we had a shallow wave 4 correction, we'd still be looking for a wave 5 higher, right? And if this is a huge wave 3 in progress, then we really will, need to be looking for some Cathie Wood price targets in 2022. And to be specific, I'm talking about, the 2000 level, right? That's not crazy. And a lot of people think that's crazy, but if this is a nest, then this is a huge wave 1. The length of wave 1 placed at the wave 2 low gives a minimum wave 3 target, and then we'd have a shallow wave 4 correction and a wave 5 higher. So, Tesla going to 2000 is not out of the question. I think right now it'll hold above 895 and go on a wave 5 higher. I think wave 5 clearly will go past the 1360, 1400 range, and then we're going to know, yeah, this is another wave 1 and another wave 2. 1368 is the conservative wave 3 target. We'll have a shallow wave 4 and a wave 5 higher. But one thing I certainly know, bulls who just stare at Tesla will do a lot worse than bulls who trade Tesla as a whole. That's what we've been doing this entire time. Here's First Solar. This is a wave 1 and a wave 2. We talk about that big count a lot. Just to kind of touch on it, this is a huge, massive nest, an explosive wave 3 of wave 3, a decades-long breakout for First Solar. And we've proven that. I've been talking about First Solar since the low 70s. It looks pretty damn good. We're going to talk about the short term in this video. If we look right now, the full count from the March low looks like this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. Huge base, right? This big old base, right? Get every retail trader out, get all their shares, get their stops with this kind of textbook stop raid before the explosion, right? They were accumulating First Solar this entire time, just like they were accumulating Tesla this entire time, right? They were all being accumulated together. Enphase Energy, First Solar, Tesla, they're all over, the bar chart straddle and strangle screener with low implied volatility all summer, and we can see why. Okay, but in the short term, First Solar forms a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. This is a wave 3 and a wave 4. So the length of wave 1 placed at the wave 4 low says that a wave 5 could take First Solar to 135. If I wanted to just kind of quickly measure the fibs right now for what a kind of wave 4 invalidation would be, we're right at that 50% retracement. So the 61.8% retracement is kind of a usual stop. But if we went below the 61.8% retracement, we could still call this 1-2, 1-2. So that wouldn't be the end of the world. But I do think that First Solar will hold above 103 to around 107, but definitely 103, right? 107 is way too tight. But I think we hold above 103. And this is a 1, 2, 3, 4, 5 waves to the upside. The length of wave 1 placed at the wave 4 low would take First Solar to 135. Now, if we did break below 103, the reason that's not really an invalidation level is because this could certainly be a 1-2 Elliott wave nest. We really don't know, but if we went below the 61.8% retracement, it would be the case. But anyway, the point is First Solar has a lot more upside. Enphase Energy has a lot more upside. All these ETFs look beautiful right now. I think one of the best opportunities in the market right now is the ETFs that hold Tesla, Enphase Energy, and First Solar that haven't broken that January, February high yet. I think there's a high likelihood that they will. And we've proven so much of this, right? We had an ABC correction for Enphase Energy. This is an 11% holding of TAN, right? So, we're not getting too loose with our correlations. This is an 11% holding of TAN. TAN hasn't broken this exact same high. But if we look right now for Enphase Energy, this is a wave 1 and a wave 2. We've proven this wave 3, gorgeous 1, 2, 3, 4, 5 wave subdivision. So this is a wave 1 and a wave 2 for Enphase Energy. Conservatively, this is a wave 3. Even if we get a pullback, we'll call that a wave 4 before a wave 5 to the upside. So waves 1, 2, 3, 4, and 5, we've had taking Enphase Energy to 310 since September. We're halfway there, right? So if it looks like Enphase Energy is going to 310, then we're probably not going to see Tesla crash during that time. And that's why we trade the market. We trade these sectors as a whole. NIO, right? By the way, that looks like a gorgeous weekly Ichimoku Cloud breakout, a weekly Ichimoku Cloud bounce for NIO. But just to get rid of that for a second, I think NIO is going to kind of follow a lot of these names in the Chinese EV sector, right? Tesla and NIO, they always kind of trade together. I don't think this quarter is some anomaly. I think that NIO is about to get a lot of money flown into it from Tesla. And this is a huge wave one and a wave two, right? So, stocks do break that IPO base low, right? Sometimes you do break the IPO low. It's not the end of the world. I think this is a wave one and a wave two for NIO. And this is a huge wave three of wave three. So just focusing on the smaller degree, right? This looks like a wave one and a wave two. We've already seen kind of Xpeng and Li Auto kind of break the same similar wave one high. I'm not going to get too carried away with that correlation, but I think this is a wave one and a wave two for NIO. So we're above this low of 33, then we're going to 70 for a wave three target, which is the 161.8% extension of wave one. Then we would see a shallow wave four and a wave five higher. The length of wave one placed with the wave four low, should take NIO all the way to 85, and that's just waves 1, 2, 3, 4, 5 to the upside. So NIO's got a lot of upside. I think 33 holds, definitely 30 holds, and we go on an explosive rally to 70 before a shallow wave four and a wave five higher. Xpeng is, there's just so many examples of this, right? We could talk about all day, and we'll talk about a few of them, but Xpeng looks really good, right? This looks like a clear wave one and a wave two for Xpeng. We hold the 50% retracement. It looks like we're within a big wave three right now to 63 before a shallow wave four and a wave five higher. So Xpeng looks like a lot of evidence that it and Li Auto are going to hold this kind of October low. And Xpeng looks like it's going to go into a wave three right now to about 63 before a shallow wave four and a wave five higher. The length of wave one placed with the wave four low should take Xpeng to, 80 just within the cycle from this low. And as we always talk about, that's a big deal because that would be a base breakout for Xpeng, and that more recent IPO once again would correlate with a higher risk, higher reward opportunity. Xpeng looks like it was one that's going to be worth it. I think a lot of these are going to end up being worth it, but they're not for the faint at heart, right? It's not easy to hold Xpeng. It's not easy to hold, a stock like Netflix or Tesla or Bitcoin or Nvidia, right? So this is a huge 1, 2, 3, 4, 5 waves impulse for plug power. This is a huge wave one and an ABC correction that ended a huge wave two at the 78.6% retracement. So the length of wave one placed at the wave two low, that kind of has plug power going to 92 within this huge wave three right now. I think even on the smaller degree, this is a wave one and a wave two. And this is the big wave three. And we're going to know for a fact this is the wave three when we go past 46.90. We're almost past there, but, plug power looks really good. And there's just so many examples of this exact same kind of deep 78.6% retracement across the clean energy sector. I want to talk about Bloom Energy. Bloom Energy was one, like we talked about in the beginning of the video. It went right below my stop of 18 and then exploded. Okay. It's that classic stop raid. And that happens, right? Because they were accumulating options on Bloom Energy this entire time, right? And then that classic get below puppy trade stop raid before we explode is exactly what happened. My stop was 18. Yeah, we went to 16.82. But just another example, right? The most the biggest winners will have some of these selling climaxes that even get the best traders stop raids. So this is a wave one and a wave two for Bloom Energy. I think this is another wave one and another wave two at the 61.8% retracement. The length of wave one placed at the wave two low, it's going to take Bloom Energy to 59. And we've already gotten a lot of evidence that that's a big wave three in progress. So, we're seeing this across the market. I think Acromoto is a nice opportunity. It hasn't exploded yet, but we're seeing a lot of these small cap clean energy names look really well. Many of these ETFs look really good. This is Acromoto. It's a 1, 2, 3, 4, 5, a huge wave one, and an ABC correction that ended a huge wave two at the 78.6% retracement. One kind of theme of this video is that there are many growth stocks that look kind of ridiculously explosive. And, Acromoto is just another one where a big wave three that breaks this, high that was formed in the first quarter is expected. And I think this is a huge wave one and a huge wave two. So this is a big wave three in progress. The minimum wave three target is the length of wave one placed at the wave two low. That should take Acromoto all the way to 43. And that looks very kind of cleanly subdivided right now. So generally I'm expecting that, through the first quarter, through the second quarter, we're going to see some explosive breakouts in a lot of these clean energy names. Right now, I want to see that Acromoto will hold above 7.32. I think it will, and I think it heads, to that kind of high that the first quarter formed for a lot of these growth stocks. Here is ACES. This is just an ETF of clean energy stocks. The reason that I'm talking about it is because the biggest holdings are about 5% each of the clean energy stocks that I talk about most regularly. So it's First Solar, Enphase Energy, Tesla, Next Era Energy, and Plug Power, if I'm right, are all 5% holdings of this. So, for Tesla bulls especially, this is kind of just one of many examples, right? We talk about the solar ETF TAN, but this ETF looks like it clearly has, more upside. So ACES holds Tesla. It's a wave 1 and an ABC wave 2. Looks like a clear wave 3 is in progress to 88. Even conservatively, we'd expect a shallow wave 4 and a wave 5 higher. The length of wave 1, place of the wave 4 low, says in a very conservative view of this ETF, it's going to 99, right? So if I'm a Tesla bull, this is something I would look at, to be honest, in the same way that I look at, healthcare, more than I look at SPY. I would almost be looking more at the clean energy ETFs like TAN, like ACES, than I would Tesla itself. As long as the Enphase energy projections are playing out, I think clean energy bulls in general will do very well, to be honest. So here is the ONLN online retail ETF. It looks gorgeous, right? And people get confused why I talk about these ETFs. The market is so cleanly organized into these exchange traded funds. And this is one of the most useful ways to analyze the market, right? I use this all the time. And so many times we'll see that a stock like Shopify, for example, Shopify is in ONLN. And it exploded above this high. Well, here's the thing. Amazon and Alibaba, they're still down here. But Shopify, which is in this ETF, has already exploded to a new high. So I think Shopify may be a leading indicator that we're correct about ONLN, the e-commerce stocks like Fiverr and a lot of these names. So this is a wave 1 and a wave 2, very clearly for ONLN. I mean, hard to dispute this, to be honest. Wave 1 and wave 2, the really only argument would be that this is another wave 1 and another wave 2, which it certainly could be. That'd be more aggressive. I think the more accurate view is that this is a big wave 3. We ended wave 4 at the 38.2% retracement. The length of wave 3, place of the wave 4 low, is going to take ONLN to 128. This looks really good. I mean, this is 11 months, and it kind of shows how we can see a lot of outperformance, for a lot of, stocks in the e-commerce sector like Alibaba, Wayfair, Amazon, Fiverr. And this outperformance could last through 2022. And I think it will. I think right now we're going to hold above 63 to 61. We're going to go on a huge wave 5 higher. There will be at least the length of wave 3. You place it the wave 4 low. That's going to take ONLN to 128. Very good news for Amazon. Very good news for a lot of kind of e-commerce stocks, especially in the Chinese sector like Alibaba and Wayfair. Here's Amazon. I mean, this is kind of one that a lot of bulls probably want to keep in their back pocket. Wait a minute. Does this look like froth? I don't think this is froth. This is a 1, 2, 3, 4, 5, a big wave 1, and an ABC correction, huge wave 2. We just talked about an online retail ETF that holds about 20%. Amazon looking really good. Shopify is exploding. Isn't it kind of Christmas coming up? So anyway, this is a wave 1 and a wave 2, another wave 1 and another wave 2. It's going to be Black Friday, and that's going to look really good. It lines up. I don't trade the headlines, but it lines up. This is a huge wave 3 in progress for Amazon right now. The length of wave 1, place of the wave 2 low, should take Amazon to a new high of at least 3,800. That's a very conservative wave 3 target. But from there, we'd have a shallow wave 4 that conservatively retest the wave 1 high before a wave 5 that's at least the length of wave 1, place of the wave 4 low. All in all, I think Amazon has a very clear path to 4,400. I think it hits 4,000 by the end of the year. I think it hits 4,400 by the end of the first quarter pretty conservatively. And I think that, Amazon is really going to carry the market on its back at some point throughout December and January. I'd be surprised if it didn't. I think the entire e-commerce sector is really looking explosive right now. We'll talk about Twitter and Pinterest. Kind of within that theme, my last video, we talked about the software sector looking very explosive. Here's kind of the social media side of things. It looks very explosive right now. I think Twitter formed a wave 1 and a wave 2. Conservatively, that's a wave 3 and a wave 4 that ended between the 38.2 and the 50% retracement. So I think Twitter's within a huge wave 5. So yes, this could certainly be another wave 1 and another wave 2. And we could see Twitter explode out of this kind of IPO setup. So this is kind of also a long-term opportunity, in my opinion, because this is a big old IPO base. Twitter's just broken out of this base, kind of back-tested it right now. And a lot of times in Elliott wave theory, the wave 1 high being retested is a very nice buying opportunity. I think it is right now. This is a wave 1 and a wave 2 aggressively for Twitter, but we don't even need to be aggressive. We can call it a wave 3 and a wave 4 and still expect a huge kind of upswing It lines up a lot with Pinterest, though, that this could be a bigger kind of social media opportunity. I think Twitter is a wave 1 and a wave 2, a huge wave 3. They went past the 161.8% extension of wave 1. We ended wave 4 between the 38.2 and the 50% retracement. So we're in a big wave 5 right now. Wave 5 should be the length of wave 3, placed at the wave 4 low. It'd be a longer term idea, but Twitter getting to 110 is certainly possible, probably in the summer or later into 2022. A very conservative wave 5 target says Twitter's at least going to make a new high, but that's kind of silly that wave 5 would end right here. I think this is wave 1 of wave 5, wave 2 of wave 5, so waves 3, 4, and 5 of wave 5 are going to be pretty explosive. It lines up a lot with Pinterest. So this is looking pretty good. We talk about the online retail, the software stocks in general, the growth stocks in general, looking very good. A lot of evidence that kind of Cathie Wood stocks aren't done. I actually think they're just getting started. Here's Pinterest. It's a wave 1 and a wave 2. This is another wave 1 and another wave 2. So we can't really call this a wave 3 and a wave 4 because we've gone all the way down to the 50% retracement. So wave 4 can be a little deep, but it's another example of the wave 1 high getting retested. So that IPO high of 36, that could be a nice opportunity. This is a wave 1 and a wave 2. I think right now, the only way to kind of trade it is to say that we want to stay above the IPO high, which is about 36. So above 36, the length of wave 1 placed at the wave 2 low, very similar to Twitter, says that Pinterest could be a huge opportunity right now. Another one of these kind of big selling climaxes in the growth sector that ultimately takes Pinterest to 122. I think it happens. Here's Beyond Meat. Beyond Meat doesn't really look that bad. It kind of seems like we have doomsday sentiment for this, but what is this? This is a 1, 2, 3, 4, 5, a huge wave 1 for Beyond Meat. And now we form a big wick at the 78.6% retracement. This stock has a 30% short float. It's got 7 days to cover. If I was a large institution right now and I've been shorted Beyond Meat, I would be aggressively covering, on a 20, 30% gap down. And I think that that's kind of what's going to happen. But just with the wave theory from the IPO low, this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. This wave 1 is cleanly subdivided into 1, 2, 3, 4, 5 waves. Kind of no matter how you count it, the 78.6% retracement, I think is going to be a nice opportunity. So for a growth stock like Beyond Meat, a stop of 76 is just really wide, right? But, it's kind of a little too far to have the stop be 48, but that is the invalidation level. If Beyond Meat is above 48, there's certainly still a good risk reward opportunity. The length of wave 1 placed at the wave 2 low is going to take Beyond Meat to the 250 range, and that's just the minimum wave 3 target. We'd have a shallow wave 4 that retests the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. That could take Beyond Meat to the 390 level. I still think it's a nice long-term opportunity. Growth stocks, they're not for the faint of heart. Okay, I'm holding a couple of growth stocks that I took half positions in that are down 50 and 60%, and I'm perfectly fine with that because the ones that I picked that didn't look like they're going to be monsters. And I think that a lot of these stocks that I did pick, like Huya and, Lordstown Motors and Ebon that I actually bought, I think that they will recover. So I take half positions in growth stocks and I just kind of hold them. I think that the time horizon, the time target of multiple years down the road for me is just as important as the stop level. So I take half positions with growth stocks and I get rid of the risk management right up front. And I think Beyond Meat, this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. I think the big boys have been accumulating this for a really long time. This is that textbook, selling climax, get every retail trader's stop rated, right? If you're on margin, now you're not in Beyond Meat anymore. The length of wave 1 placed at the wave 2 low says we know exactly why. It's going to about the 250s before a shallow wave 4 and a wave 5 higher. I think it looks really good. And I think, a couple years down the road, we're going to see this has multiple stock splits. So here is Bitcoin, right? I pick stocks that, quintuple all the time, right? I'm not like a moon boy. I talked about Bitcoin at 12,000, looked crazy saying it was going to double. That ended up being conservative, right? Marathon Patent Group, Tesla, Enphase Energy. It's not like I have, no track record, right? I regularly pick stocks to double and triple. This is Bitcoin. It's a 1, 2, 3, 4, 5, a huge wave 1, and an ABC correction that ended a huge wave 2. The length of wave 1 placed at the wave 2 low, right? There's no wave C. Bitcoin's going to 90,000 pretty conservatively, and even just within the cycle, I think this is at least a wave 1 and a wave 2. Now we've broken to a new high. We've passed the 161.8% extension of what would be a wave 1. We've confirmed an impulse structure, and that's kind of the real important thing. Should we chase Bitcoin at 63,000? Not when I was talking about it at 30,000 or 10,000, but I think it's still a lot of evidence. Bitcoin's going to 90K for a minimum wave 3 target. We'll have a shallow wave 4 that retests the wave 1 high conservatively, then wave 5 will be at least the length of wave 1 placed with wave 4 low. All in all, Bitcoin's got a pretty clear path to 126,000. Riot blockchain, is starting to follow, right? It looks silly that Marathon Patent Group was going to 75, and then even when it did, people thought that SOS and Riot blockchain were exploding was silly, even though they had just seen Marathon Patent Group explode. So that didn't make any sense. But anyway, a lot of these stocks literally own and hold and mine, a lot of Bitcoin and a lot of Ethereum. And you've already seen Ethereum and Bitcoin have exploded. So I'm not sure why it's so unbelievable that these companies would too, but for Riot blockchain, it's a wave 1 and an ABC wave 2. The length of wave A placed with wave B high is where wave C ended. We said that Riot blockchain was going to follow Marathon Patent Group, that it was being accumulated by large institutions, and we just can't really be surprised that this is happening. I think that we're going to explode into a huge wave 3 of wave 3 right now. We're going to go to the lower bound of the pitchfork and ultimately to the median, in the same way Marathon Patent Group going to 75 was that conservative wave 3 target. That's the comparable wave 3 target for Riot blockchain, and we've gotten far away from the stop levels, so it's looking good. I like it a lot. Here is SOS Limited. SOS Limited, I think they mined close to 1,000 Ethereum last quarter, and we just saw, Ethereum explode. This is my long-term view for SOS Limited. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. Yes, this is extremely risky, but this is a growth stock, and, this company isn't just involved with Bitcoin mining and Ethereum mining. They're also a little bit of a software company. They're also a Chinese stock, and those are two sectors that we've been looking at doing very well. I know this sounds crazy, but this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. It's all about risk reward. I would never take, the same size position in SOS Limited, that I did in a value stock like Pfizer, but there's a lot of upside still. This is a wave 1 and a wave 2. The conservative wave 3 target is the length of wave 1 placed with wave 2 low. The textbook wave 3 target, it's up there. I mean, you can see it, but I hear a lot of people, when I post about Marathon Patent Group, I post about Riot blockchain, they say, damn, imagine owning Marathon Patent Group at 25 cents, 50 cents, $1. To me, this is kind of Marathon Patent Group at 50 cents, $1, $1.25, and we can see why people never owned it, right? It's very difficult. You have to go through a lot of ridicule, but, for me, SOS Limited is worth it. Personally, I think, very tight, it would hold above $1.21. A real big invalidation would be 51 cents. To me, the risk management is going to be in the position size, but the upside is certainly there. And we've already seen Ethereum and Bitcoin already explode. I think, the writing's on the wall. We're going to break above this high and potentially go into the 20s for SOS Limited.